famous faculty for the topic, Balaji sir. Now I request Sharan Kumar Uppalapati, SICASA chairman, to introduce him to the audience.
Yeah. Good evening, the speaker. Good evening, secretary sir, and all the participants. Let me take the privilege to introduce C.R.S. Balaji garu. He is a fellow chartered accountant from the Institute of Chartered Accountants of India. He has done the Bachelor of Commerce from University of Madras. He is a practicing chartered accountant specializing in audit and indirect taxation. He is the co-opted. He is the co-opted member, Auditing and Assurance Board of ICI. He is the member, Academic Council of Sri Shankara Arts and Science College, Kanchipuram. He is the member, Editorial Board of Padukas Publication. He is the faculty for many subjects of CA Intermediate, CA Final, and many academics. He co-authored a professional book, Padukas Company Law Ready Reference, awarded as Best Outgoing Student and Secured College First. He is the regular speaker at various professional forums on subjects like GST and standards of auditing and so on. Completed the certification course on the international taxation. With this brief profile, I put before you C.A.R.S. Balaji garu. Over to you, Secretary, sir.
Sir, you can start the session, sir. Thank you.
Very good evening, Hyderabad, Bhagyanagar. It's my privilege to be here as a part of this particular virtual CPE meeting. Thank you, Ravi Shankar Reddy sir, Secretary of the Hyderabad branch of the SICASA chairman, and all the office bearers of the prestigious Hyderabad branch of SIRC of ICAI, where I am closely associated with Hyderabad. Usually I used to come to Hyderabad, especially the AV college, where I had the privilege of getting your hospitality, wonderful food, a lot of networking, a lot of friends. I still remember all those aspects. It's my happy evening for sharing this particular knowledge with regard to the finalization of audits. What is the care and caution to be taken, especially in light of the provisions of standards on auditing, SA 500, 501, and 505 here. Being practicing professionals, we are all burdened or bounded with the timelines and compliances. We may be, in order to complete a particular task within the scheduled time, stipulated timelines, we may go and accommodate. We know the client and we know the pressure, we know the time compliances, and accordingly we may do very right activity. But at times it may come as a boomerang for us, where whatever that is expected, if at all we have not documented, or whatever that is expected, if at all that we have not verified, or we have not reported in the right manner in which it is expected, there will be always a huge questioning to the auditor, and first question to the auditor only. So we are having a huge risk in carrying the profile, being a practicing professional. In order to remove all this burden, or in order to ease out, what we have to do exactly, we may be doing it practically, but even in theoretical perspective, even in documentation perspective, with regard to compliance perspective, are we in the right track or not? We need to re-evaluate now. This is a very good time where we need to re-engineer ourselves, and then we need to tackle the issues as professionally. Not only our understanding in this matter will help, our articled assistants, our engagement team is also to be given the same level of knowledge and yarn, so that they will also be in a position to do the audits in the way in which it is expected. This particular 2-hour session, that is from 6 o'clock to 8 p.m., that we are going to discuss, and we are going to primarily focus, considering the small and medium practitioners, especially at the time of completion of the audits. Now it is exactly the time for us to go and complete the audits finalization with regard to a private limited company or a public company, or even other entities, where the standards on auditing are squarely applicable. It is not only for companies that standards on auditing shall be applicable, even for a private trust, even for an individual assessee while performing a tax audit, these particular standards on auditing are very rightly applicable here. So what are all the requirements as per the standards? Practically, where we will be missing it out, or where we need to focus more, is what our session is going to be for the next 2 hours, where I will be focusing more specifically on SA 500 that talks about audit evidence. That is a mother standard for all other evidence related standards, like SA 500, 501, 505, 510, 520, 530, 540, 550, 560, 570, 580. Like that, we have all the entire series of 500 essays. That for that the mother is essay 500 here, audit evidence, that we will be focusing on that particular essay. And more precisely, we will be jumping into essay 501 that talks about specific aspects that I need to go in for while finalizing an audit. 3 important aspects is discussed in that essay 501. And lastly, we will be also focusing on essay 505, which talks about external confirmation, how the process is to be, or what are all the precautions to be taken while doing an external confirmation, especially in a technological environment. Because gone are the days that we used to send a communication letters, physical letters, and then getting back the responses. Now there are technologically we get the responses through emails as well, digitally signed document. So how far it can be relied upon is also to be taken up as a matter of our discussion here. Also, I like the aspect of would like to include in this particular discussion with regard to CARO 2020 also. I would like to refer the CARO related points because it is important compliance. Right from this year onwards, we are going to report on CARO 2020. Previously, we were reporting on 2016 CARO. Now CARO 2020 applicable from this year onwards. So how we need to look on to those certain specific aspects linked with audit evidence 500, 501, 505 is whatever matter of discussion. I hope that for the next 2 hours, it will be a interesting one for our mutual professional gaining of the knowledge here. Let me move on to this particular session with a base background that the financial reporting ecosystem, how it operates. Basically, before going into the right topic, I want to set out the platform wherein the financial statement, financial reporting ecosystem, basically where the management prepares the financial statement, the auditor verifies of the same, and then reports to the shareholders. Not only the shareholders are involved or the stakeholders, there are very many other peoples where the financial reporting ecosystem revolve around, maybe by the management, the board, including the audit committees, external auditors are also part of it, where government and regulators are also watching on this particular aspect for various compliances, and financial statement users, the ultimate beneficiaries, including the investors, the lenders, or even the stakeholders here. In this financial reporting ecosystem, there is always something called as audit expectation gap is always there. They believe that the auditor is going to do certain magic and then he has to purify everything and then he has to give a clean report, is what maybe predominantly the expectations. But in fact, that is not the role of the auditor, where globally, not only I'm talking about in an Indian scenario, globally, there is a huge discussion that's happening with regard to audit expectation gap. What is exactly this particular audit expectation gap where we need to go and address? Where the audit expectation gap is discussed like this. We have knowledge gap, we have performance gap, and also we have something like evaluation gap, which results in audit expectation gap. So there are 3 parameters and pillars which contributes for this audit expectation gap. What are all the 3 aspects here? With regard to knowledge gap, what is this knowledge gap? Is it the inadequate knowledge or incompetencies of the auditors that we are talking about, the knowledge gap? Definitely no. The knowledge gap is what is actually the people think of that the auditor is going to do vis-a-vis what is expected from the auditor to be done. So the difference between what public thinks the auditor to do and what actually auditors do is something called as knowledge gap. This recognizes that the public may misunderstand the role of the auditors. Exactly, this is the point. Misunderstanding the role of the auditor is very huge. That's even happening today, even at a high level, even at the governance level, this is happening, where the auditors are believed to be the detectors of all the frauds and errors that's happening in the financial statement, which is next to impossible here. Nothing is possible in that particular regard, where I may not be in a position to detect all those errors and frauds because that is not my role and responsibility. Knowledge gap, first pillar. The second pillar is on performance gap, exactly where we need to focus on being practicing professionals. Performance gap is auditors do not do what auditing standards or regulations want. So there are certain expectations from the auditor that you have to do, you have to comply 1, 2, 3, where the auditors do not comply those aspects. That is exactly something on performance gap that we need to address this. We need to try to minimize this particular gap. We need to improvise on this particular scenario, performance gap. And the third important parameter is an evaluation gap because of the information technology and the way in which the environment operates. where there are huge developments that are happening. The adoption of the same, the embracing of the same by the auditor is something with regard to evaluation gap, where technology plays a very, very vital role. The moment I think of Hyderabad, I always think that it's a technical city, it's a technology hub, where Hyderabad is always considered to be the technology hub, where we need to gear up to that particular levels, where what is in the financial statement preparation level by the management, the use of automated technology and the use of the same by the auditor while verifying the same will try to reduce the gap of evaluation, so that overall the audit expectation gap can also be reduced while me performing an audit aspect. This is not only applicable for a listed entity audits. This is equally applicable for a private limited company or even a public limited company, a small company, whatever may be the case. This particular audit expectation gap is to be reduced. Specifically, being the auditor, I may not be in a position to focus on knowledge gap, but I need to necessarily concentrate on performance gap, so that I actually do what the regulations require from me. In this regard, where from the Companies Act, being predominantly the audit finalization revolves around the companies, there is a specific section 143.9. 143 by itself talks about the duties and rights of the auditor, where 143.9 exclusively talks about every auditor shall comply with auditing standards. Previously, under Companies Act 1956, there is no such requirement. Companies Act 1956 doesn't talk about how the way in which auditor has to perform the audit. It only talked about qualifications, disqualifications of the auditor, duties of the auditor, rights and responsibilities of the auditor. There ends the matter. It doesn't talk about the way in which auditor has to do. However, Companies Act 2013 specifically contains this particular provision, how the auditor has to perform the audit. He shall comply with auditing standards. What is this particular auditing standards? How the auditing standards are to be applicable for a company? Those auditing standards on auditing that are issued by ICAI will be presented to NAFRA, which is a regulatory body of the Government of India. The NAFRA will go and vet it, and then they will recommend the same to NCA for notifying the same, and then based on the recommendations made by NAFRA, this particular auditing standards will be notified by NCA. All such auditing standards that are as of today that we follow has been already notified by MCA here. So we need to mandatorily comply with auditing standards. We don't have any other option. Specifically from the ICAI perspective, that we talk about standards on auditing, SAs, but from the Companies Act perspective, it is called as auditing standards. Both are one and the same except for the name. All other aspects are equally applicable. Whatever that ICAI has recommended, the same is adopted without any modification by NAFRA. So even in our audit report, if you carefully watch, under the auditor's responsibility paragraph, we will give a declaration that we have conducted our audit in accordance with standards on auditing, like that, as per section 143.10, like that, we will be giving a declaration format. We ourselves will declare that we have done that in accordance with standards on auditing. Unless we comply with standards on auditing, we cannot give such particular declaration. And also NAFRA or even Companies Act MCA is having every right to question the auditor the way in which you have complied. Show me the documents through which that you have complied with standards. So it is necessary for the auditor to not only comply with the standards on auditing, but also prove with the documentation the various requirements that standards on auditing require while completing an audit of financial statement here. The ultimate objective of an audit is to express an opinion on the financial statements. The moment I express the opinion on such financial statements, my duty ends. But incidentally, for expressing this particular opinion, I need to obtain such sufficient appropriate audit evidence to go for that particular opinion here. Incidentally, there are other legal and regulatory responsibilities that are costed to the auditor. So there are two types of responsibilities to the auditor the moment I take up an audit of financial statements. One is expressing an opinion on the financial statement, that is on one hand. On the other hand, there are various legal and regulatory requirements that may be as per Companies Act, as per LODR, or whatever may be the case, that are applicable financial reporting that is applicable to that particular entity. I need to go and communicate the same to the users of the financial statement. So there are two important responsibilities that are to be taken care of. While doing an audit of financial statement, my dear friends, please have this particular point in mind, because all the standards on auditing focuses on this particular point alone. Essays always contains items to design which are designed to support the auditor while doing an audit. Essays are not a instruction manual. Essays are always a supporting guidelines. However, there are 5 important aspects that we need to understand in order to complete my audit in accordance with standards on auditing. There are 5. There are 2 plus 3 formula. 2 in the mind, 3 in the finger. Like that, we have a formula that is to be mandatorily complied with. What is the 2 in the mind and 3 in the finger, which is to be complied with this? The essay require that the auditor exercise professional judgment and maintain professional skepticism. This is a constant factor. I need to always apply professional judgment. I need to always apply professional skepticism. What do you mean by this professional skepticism? It's a very important technical term that is discussed all over the globe, where it's nothing but the attitude of an auditor, having questioning mind, being alert to conditions that could indicate possibilities of errors and frauds, and critical examination of my audit evidences. Is it sufficient and appropriate or not? So there are professional skepticism and professional judgment, which is a constant factor to be applied in all the audits, whatever the item that I take care. Apart from these 2 constant factors, 3 variable factors are also to be considered by the auditor. What are the 3 variable factors to be applied with? Number 1, I need to identify and understand the risk of material misstatement by understanding the entity and its environment, including its internal control. First point is, sir, there are possibilities of material misstatement in the financial statement. How to identify that particular material misstatement? For that, first of all, I need to understand the entity and its environment, including its internal control. It's in a simpler way, if at all we want to convey this, it is nothing but KYC, know your customer, knowledge about the client's business. Without this particular knowledge about the client's business, without understanding the entity and its environment, including its internal control, I cannot proceed further at all. I may not be in a position to do the audit in the way in which it is expected. So I need to necessarily understand the entity and its environment, including its internal control, so as to rightly apply the legal and regulatory requirements, so as to rightly identify the material misstatements that could be possible. And accordingly, after identifying this, I need to go for the second step. The second step is design my audit procedures in responses to that particular identified risk, so as to obtain sufficient appropriate audit evidence here. Obtain sufficient appropriate audit evidence about whether really that particular material misstatements exist through designing and implementing appropriate responses to the assessed risk. It's like a diagnosis by a doctor. A patient comes to a doctor, sir, I have a stomach pain. Immediately, doctor will not give any medicine. He will first try to diagnose that particular disease, whether how long it is, how severe it is, how frequent it is coming, or he may even go for some testing like X-ray, or he will go for some scans or lab tests like that. He may go for it. It's nothing but a diagnosis and understanding the severity. That's exactly the first point. That's nothing but identifying and assessing the risk of material misstatement by understanding the entity and its environment. The moment the test reports are available with us, immediately based on the reports, based on the observations made by the auditor, applying the auditor's judgment, based on the doctor's judgment, he will prescribe something like a medicine for it. This is incurable through medicines. No, we need to go for a surgery like that. Based on the assessed risk, there will be responses that will be made. Here also, from the auditor's perspective, where based on the possibility of material misstatements, the auditor will be designing his audit procedures. Either he go for a detailed, elaborate verification methodology, or he may shrink the audit procedures. He may confine to sampling techniques. He may go for a detailed verification in one particular area where there are good controls and very good controls are in place. He may be going for a fewer verifications in that particular area. Like that, the responses will be made based on the assessed risk. That is the second provision. Accordingly, I will be applying my audit procedures also. And thirdly, based on the audit procedures that I have obtained, I will be obtaining sufficient appropriate audit evidence, and I will be basing my opinion based on such sufficiency and appropriateness in audit evidences here, where the opinion that will be formed by the auditor as per say 700, 701, 705, 706, like that, I will apply various reporting standards, and then I will be reporting back to the shareholders here form an opinion. That's very, very important. That's very, very crucial, that I have to form an opinion, whether I need to go for a clean opinion, should I need to go for a qualified opinion, should I need to go for an adverse opinion, should I need to go for a disclaimer of opinion. All will be exactly dependent upon the sufficiency and appropriateness in audit evidences. The ability of the auditor to form an opinion based on the information explanations provided to us, based on the data that is available to me, I shall be in a position to form an opinion, and accordingly, I will be expressing that by way of my audit report. So, as I told you, essays exactly addresses on these 5 points. Something on professional judgment and professional skepticism as a constant factor, identifying and understanding the risk of material misstatement, making responses to that particular assessed risk, form an opinion and conclude a report based on it, is the 5 simpler points. The moment I comply with all this, automatically compliance to standards on auditing is made in a macro level. But at micro level, there are specific requirements. There is always an audit risk. The audit risk is always hanging on the auditor. The possibility of auditor expressing an inappropriate opinion when the financial statements contains material misstatement is something called as audit risk. The possibility of auditor going wrong, simple as that. There is a very high possibility that an auditor may go wrong. In every audit, this particular risk is associated. As an auditor, I need to try to reduce this risk to an acceptable low level. For that, I need to understand the components of audit risk. As per SA 315, this particular chart has been provided here. It is discussed in SA 315 here, where there is an audit risk, which is basically divided into 3 further components, something like inherent risk, which is inbuilt in any entity in the way in which accounting estimates and judgments are being made, and the financial statements could contain material misstatement even without the knowledge of the management, will be something called as inherent risk, which is inbuilt in the organization. Say, for example, I'm a real estate company. I need to go and compute my closing stock or inventory valuation. All my partly completed apartments or my inventory here. In that particular case, my assessment, the management's assessment with regard to the valuation may involve huge estimates, huge judgments here in this particular regard, which will be materially misstated without the knowledge of the management by itself. It will be treated as an inherent risk inbuilt in the operations of the entity. The second one is something called as control risk, where the client's internal control failure or ineffectiveness in the internal control failure, which will allow frauds and errors to come inside the financial statement, something called as control risk, where the internal controls plays a very vital role in this. If the internal controls are weak, my control risk is open. On the other hand, if the internal controls are very strong and effective, my control risk is closed, so that the possibility of material misstatement entering into the financial statement is also minimized here. So these 2 risks, inherent risk and control risk, put together is something called as risk of material misstatements, the gateway through which a material misstatement can enter into the financial statement. As an auditor, I need to express that the financial statements are free from material misstatements. There are no material misstatements in the financial statement. So that particular opinion that I need to give, I need to necessarily evaluate the gateways, whether they are open or closed, how effective they are. I need to monitor that so as to reduce my audit risk. Apart from these 2 risks, there is also one another risk, that is from the auditor's perspective, something called as detection risk. Please understand, this inherent risk and control risk, the auditor doesn't have any role to play. It is all the management's role to play. It is a pre-audit risk. But however, with regard to detection risk, it is the failure of the auditor to detect that particular material misstatement which is there in the financial statement, maybe because of my inability, maybe because of my sampling procedures, maybe because of my wrong adoption of technology. All will result in detection risk here, absolutely attributed to the auditor. So as the auditor is concerned, I need to reduce this particular auditors. I cannot eliminate this auditors to 0 level, not possible. Always there are risk component available here. So the auditor has to reduce this auditors to an acceptable low level. The more sufficient and appropriate audit evidence that I have, the lesser the audit risk that I face. The possibility of more information, more data, more relevant and reliable information available, the possibility of auditor providing an inappropriate opinion is automatically reduced. So there is always a relationship between audit risk and sufficiency and appropriateness in audit evidence. Why I am talking all this? Because I am now moving on to audit evidence, that is a primary backbone standard that is going to help the auditor to reduce this auditors to a thin level. Without audit evidence, I cannot do that. So audit evidence is the backbone for all that I do in an audit. For what that I am doing for an audit, all for this particular audit evidence. With audit evidence, what I'm going to do, I need to form an opinion about the entity, and thereby I need to express my independent opinion on these financial statements. Not only opinion, other legal and regulatory requirements. Various questions have been asked on the auditor that I have to answer all these questions, all absolutely based on this particular essay, audit evidence only. So now we are entering into this first essay, standards on auditing, essay 500. Audit evidence, what does it talk about? What do you mean by audit evidence? First of all, audit evidence is actually defined in the standard itself. It's a very wide term here, which need not be confined to those accounting records alone. Audit evidences can be from an internal or even can be from an external source. It can be oral, it can be visual, it can be even in a documentary form. It can be from the accounting records, it can be outside the accounting records also. So there are very huge aspects that is involved in this particular audit evidence. It can be even in electronic form. All are permitted here. Based on the definition, audit evidence is any information used by the auditor in arriving at the conclusions which the auditor's opinion is based will be treated as an audit evidence. The information which is going to be my source of conclusions, or I am going to base my opinion based on that will be treated as my audit evidence. More importantly, audit evidence includes both information contained in the accounting records underlying the financial statements and other information. Not only those information from the accounting records is to be treated as an audit evidence, other information can even be an audit evidence here. It may not be related to auditing, may not be related to accounting, but still that information will be very good. Say, for example, there is a technological change. The company is into a particular manufacturer aspect where the technology got changed. This particular information that the technology got changed is not relating to accounting. I'm not going to pass any accounting entry, but still this will be an audit evidence. Or say, for example, there is a policy change by the government. I'm manufacturing a particular product. The government is going to give a subsidy for this particular manufacture of this particular product. The information, the policy change of the government that they are going to provide a subsidy is just an information to you. There is no accounting entry that is passed as on now, but it can be treated as an audit evidence here. Or vice versa. Say, for example, the government is having a policy that to ban this particular product that whatever the company is manufacturing. That information will also can be treated as an audit evidence because it may even question the existence of the company, because whenever there is a ban based on the government regulation, your company's going concern could also be affected here. So here, not only whatever the information that you are getting from the accounting records is to be treated as an audit evidence, certain external factors, non-accounting factors, other data can also be treated as an audit evidence as recognized by the standards on auditing by itself. This is the first definition that we need to bear it in mind. And second and very interesting definition, where we have two important definitions that they have been made in this standard. The second definition is very interesting, something like management's expert. Management's expert. Who is a management's expert that is discussed in standards on auditing? Management's expert is a person who is having technical knowledge in areas other than accounting or auditing, whose work in that particular area has been used by the management and adopted the same in the preparation of financial statements. Then that particular person is called as management's expert. As defined, an individual or even an organization possessing expertise in a field other than accounting or auditing. That is considered to be very, very important. In a field other than accounting or auditing, he is having expertise where I don't have being an auditor. That person is having that particular expertise, whose work in that field is used by the entity to assist the entity in preparing the financial statements, will be treated as a management's expert. A wonderful example is a lawyer. Say, for example, there is a litigation in a particular company and the lawyer feels that we are going to win this particular case. He is having technical knowledge in areas other than accounting or auditing, and based on the input provided by the lawyer, legal opinion, the company adopts that I need not make any provision, and then they go and account accordingly. It is the financial statement has been prepared using the work done by management's expert. In that particular case, what is the role of the auditor? How I can rely the work done by the management's expert? What extra care and caution that I have to take in such a case when an external person is also involved? Or a simpler example, maybe gratuity provisions. Say, for example, the company needs to adopt gratuity provisions here where there will be an actuarial report. Based on the actual report, the provision will be prepared by the entity here. The auditor goes with the certificate provided by the actuary. I am actually relying on the work done by this particular actuary for the gratuity provision here. So can I rely, if at all I'm going to rely, I'm treating that as an audit evidence. What will be the responsibility to the auditor? Can the auditor simply say that we relied on the work done by the actuary and then accordingly the number has been provided? Can I say so and then get out of my responsibility? Or another example could be on valuation. Say, for example, there is a revaluation that's happening with regard to plant and machinery, where there is a valuation expert who is coming and valuing that particular property, and then he provides a value, and accordingly the company revaluates, and then they go for the revaluation number, including the revaluation reserve, which is having an effect on the accounting, which I am going to sign as an auditor. In such a case, can I rely on the work done by that particular expert? If at all something is misstated, if at all there are metal misstatement because of that work, what will be the responsibility of the auditor? Sorry. Can I simply say that I have relied on that work, so nothing, no problem for me? Can I say so? When I will be out of my responsibility? We need to understand that. We need to very squarely document that. Then only we will be relieved from our responsibility. Otherwise, our responsibility will always be on that. So the SA 500 exclusively also discusses about when there is a management's expert work is used by the auditor, what extra care and caution to be taken by the auditor. Similarly, you have someone called as auditor's expert. SA 620 talks about auditor's expert, where there is a technical area where the auditor uses that particular expert's work will be treated as auditor's expert. But here we are talking about management uses the same and then auditor relies on it. It will be treated as a management's expert here. Even in a CARO recent 2020 requirement, there is a new clause for reporting under 3.1 with regard to property, plant and equipment. The question with regard to CARO is whether the company has revalued its property, plant and equipment, including right of use of assets or intangible assets or both during the year. And if so, whether the revaluation is based on the valuation by a registered valuer. Specify the amount of change. If change is 10% or more, the materiality level for this particular clause is 10%. If the change is 10% or more in the aggregate of net carrying value of each class of property, plant and equipment or intangible assets are to be reported by the auditor under CARO, new CARO reporting requirement here. So here, squarely, management's expert work will be used here because there is a revaluation which is to be done by a registered valuer here. Principles stated in SA 500 regarding use of management's expert shall be applied by the auditor while considering the work done by the registered valuer here. Whatever the registered valuer has taken care, I should also consider that specific aspects here. With regard to SA 500 is concerned, there are 4 compliance part, 4 duties that is casted to the auditor. Number 1 is whether are you obtaining sufficient appropriate audit evidence or not. How to obtain is also discussed in this. Number 2, what information that can be used as an audit evidence by the auditor. Because sometime back I told you, whatever you hear, audit evidence can be oral or visual or even documentary form. Audit evidence can be internal or external. Like that, when I told any information, can it be used? Or is there any parameter that only this can be used or this cannot be used? What information to be used as an audit evidence is discussed in the second requirement. And the third requirement talks about selecting items for testing to obtain audit evidence. How to select items? It's not obtaining audit evidence. It is selecting items for testing to obtain audit evidence. And lastly, the last requirement is with regard to inconsistencies or doubts over reliability of an audit evidence. When one audit evidence is not supporting the other one, when there are conflict, how the auditor has to rely upon, how the auditor has to resolve this particular conflict is discussed as the 4th requirement. Let us take one by one in a simpler way, in a more practical way. linked with our reporting responsibilities while finalizing the audit, so that we understand the right sense of this particular requirements here. With regard to sufficiency and appropriateness in audit evidence, mandately, it is not an audit evidence that I talk about. Always the prefix will be attached. It is sufficient and appropriate audit evidence, where the methodology that is prescribed by SA 500 is, I may carry out inspection, inquiry, observation, recalculation, re-performance, external confirmation, written representation, analytical procedures, all are permitted methodologies for me to obtain audit evidence. Specifically speaking, all these are all discussed in a different essays here. Say, for example, with regard to observation, inquiry, inspection, it is discussed in SA 501. With regard to re-performance, recalculation, it is discussed in SA 520, analytical procedures. With regard to external confirmation, it is discussed in a separate SA 505. With regard to written representation, it is discussed in separate SA 580, management's representation. Like that, each one of the methodology is also having an exclusive learning. But all these can be adopted by the auditor to go and obtain the audit evidence. Say, for example, in certain cases, I will be using external confirmation, a bank balance confirmation. I will be using an external confirmation, so that I will be obtaining audit evidence based on which I will be forming an opinion of that particular component. In certain cases, I will be getting a written representation. In certain cases, I will be getting observing through observation, and then I will conclude. So my audit evidences can be through very many methodologies that can be applied by the auditor based on the judgment, based on the item that is going to be verified, and accordingly, I will be concluding here with regard to sufficient and appropriate audit evidence. The moment you talk about sufficient and appropriate audit evidence, without reliability or relevance in that, it is not complete. Please understand, there are two aspects. One is relevance and the other one is reliability. Whether this particular information is a relevant information, if so, proceed further, and that too, if it is from a reliable source, then only you can accept it. Otherwise, if any one of the condition is not satisfying, it is of no use. Say, for example, the information is not relevant, no use, or the information is not from a reliable source, again, it is of no use. So the both twin condition has to be satisfied, that the information on which I am going to form my opinion, on which I am going to treat that as an audit evidence, should be from relevant and a reliable source. Then only I can accept the fact. So in this regard, SA by itself gives certain 5 rules of reliability. Very interestingly, we may be adopting all this. This is nothing new to us. All are known to us. But the point is, are we documenting the same? Is what the question, big question mark. We may not. We may conclude, and then we may proceed for finalizing, and then we may take up for the other audits, and then this will be under huge dumping of papers. And at a later point of time, when something is required, even for peer review purpose, or for NAFRA review, or for any other review purpose, these may not be available readily to the auditor. So the caution is on documentation. Why I need to document here? What is the rule of reliability with regard to audit evidence? As I talk about, external evidences are more reliable than internal, because it is from an independent source. That doesn't mean that only external information can be relied. Internal evidences are also reliable if internal controls are effective. The moment I have a right control environment in my entity, internal controls are operating very adequately, then in that particular case, the possibilities of errors and frauds are minimized. So internally generated audit evidences by itself will be more pure. Internally generated audit evidences will also be very much reliable, because the possibilities of errors and frauds are automatically getting minimized here. That's the second requirement, second rule. And the third rule is audit evidence is more reliable when it is in a documentary form, whether in paper or in electronic medium, rather than in other form. As I told you, it can be even in a oral, it can be in a visual, it can be in a documentary. Out of these three, when you compare, the documentary form is more reliable than in any other form. And also even in an electronic form, whether it is in paper or electronic, which is permitted. Sir, I have only digital evidences. I don't have it in paper. Whether can it be reliable? Answer is yes. However, the precautions that is to be taken in a digital media is automatically to be taken, because in a technological environment, the possibility of manipulation is very, very high. The compromise of data, the security, the breach are very high. So I need to adopt that particular technique, and then I can very much retain. Even SQC1 permits the audit evidences can be audit documentation, even can it be in electronic form, which is permitted here. The precautions that is to be taken and the Information Technology Act is to be complied here. And original documents are more reliable than photocopies or other forms. So original, always the originals will be more reliable for the auditor here. We are talking about when you compare this and that, this is more reliable. And lastly, the evidences obtained directly by the auditor are more reliable than obtained through other source. That's why even external confirmation, it is sent directly to the auditor without going to the third party. Or at times, after Satyam fraud, where there are auditors who are directly going to the bankers and then getting the bank confirmation directly from the bankers instead of sending the management team to get the confirmation letters, because those evidences that are obtained directly by the auditors are more reliable than through other source here. So all these are all reliability, rules of reliability with regard to audit evidence as stated in SA 500 itself. Yeah, this is considered to be important. While performing audit procedures, the auditor shall consider the relevance and reliability here. In this, when the information is produced using the work done by the management's expert, what extra care and caution to be taken? 3 extra care and caution to be taken. When without the management's expert work, when the financial statements are prepared, regular working. When there are management's expert work which has been used, I have to do 3 verification part. One is evaluate the competency and objectivity and capability of that particular expert. Being an auditor, I'm going to rely that as an audit evidence. So really whether he is a competent person to do the activity, whether he is really a registered valuer, whether he is having the capacity to do the activity, because I'm going to rely that particular work. Evaluate the competency, capability and objectivity of that particular expert, and obtain a gross understanding of the way in which he has done the work. I may not know because it is technical. It is purely technical, building engineering or going for evaluation of a building. I may not be aware about it, but get a gross understanding, the basis of conclusions that he is making. And thirdly, evaluate the appropriateness to use the same as an audit evidence, on what basis you are relying. Like that, you need to have a documentation, specific documentation, so as to have conformity, so as to have the right perspective with regard to understanding this particular management's expert work. For academic purpose, just for a minute, I go to a practical audit report, live audit report, so that we can have a importance of this particular essay. Just a minute, I'm just trying to quote some audit report just for the purpose of academic interest here. I take Reliance Industries being one of the India's largest corporate. Just a minute. Whatever the discussion that I am making, I make a very clear announcement here, just for academic purpose, not for any other purpose. I'm just to have a practical impact on how the reporting will be having an impact. See, this is Reliance Industries annual report, the latest available for 2021 only. It's an opinion to the members of Reliance Industries. It's an annual independent auditors report given by the auditors. The opinion paragraph has been given. As I told you, you could see that we conducted our audit of the standalone financial statements in accordance with standards on auditing specified under 143.10. That is a clear-cut declaration that is given by the auditors. Here, standards on auditing ought to be mandatorily complied with. No other option in this particular regard. Here, one of the points that I would like to draw your attention is with regard to capitalization, where there is a key audit matter. As per SA 701, the key audit matter has been disclosed in the audit report, where the auditor talks about capitalization and useful life of property, plant and equipment. What happens here? Let us go through that. During the year ended 31st March 2021, the company has incurred capital expenditure on various projects included in capital work in progress and intangible assets under development. Further, items of property, plant and equipment that are ready for its intended use as determined by the management have been capitalized in the current year. So something that the company has capitalized from CWIP, on what basis it is capitalized, whether is it complete, whether it is ready to use, whether the exact requirement output from that particular machinery can be done. As an auditor, I may not be aware because it is somewhat technical in nature. I may not be in a position to have the capacity to evaluate the same. judgment is involved to determine that the aforesaid capitalization meet the recognition criteria under India, specifically in relation to determination of whether the criteria for intended use of the management has been met or not. Then only it can be capitalized. Otherwise, it cannot be capitalized. The effect of capitalization will also be on depreciation impact. So here, there is a capitalization. There is a huge capitalization that's also happening, which is involving a lot of judgment in this particular regard, which is more technical also. Further, in the current year, the company has reassessed the useful life of its plant and machinery from 25 to 35 years to 50 years. See, this is something very important, interesting. For academic purpose, let us understand this as well. Now, the estimated useful life of the asset has been extended from 25 years to 50 years. My usual depreciation will be computed based on the estimated useful life, where originally the plant and machinery, where the company has estimated the useful life for 25 to 35 years. But now the company has reassessed the useful life of this particular plant and machinery from 25 to 35 years range to 50 years range. They have doubled. This is going to be there for next 50 years. This machinery will come, is what the judgment made by the management. I don't know, that's something very hypothetical, because in the next 50 years, what's going to happen, or the useful life will be there for the next 50 years, going in that particular basis, something very hypothetical, very, very judgmental in this regard, because the technology, the pace in which the technology changes is something normal. And then I don't know how this particular machinery is going to be put to use for next 50 years. But that's how they have computed here. Assessment of useful life of plant and machinery involves management judgment, technical assessment, consideration of historical experiences, anticipated technological changes, etc., which is considered to be highly complex in nature, which doesn't have the mere application of the auditor's knowledge, but it involves a lot of complex involvement here. Accordingly, the above has been determined as a key audit matter. This is considered to be the most significant aspects out of the matters that I have communicated to the management. This is something very important, most significant, that I thought I need to communicate to the shareholders also. Like that, the auditor has included in the key audit matter. For every key audit matter, what is the approach of the auditor will also be given parallelly. How the auditor has addressed this particular key audit matter is also discussed here, where we go through that. Our audit procedures included and were not limited to the following: examine the management's assessment of the assumptions, consider the estimation of useful life, examine the useful economic lives with reference to the company's historical experience, and technical evaluation. Yeah, this is what that my point. Technical evaluation by third party specialist appointed by the management. Who is this third party specialist appointed by the management that we are talking about? We are talking about management's expert, who is having technical knowledge in areas other than accounting or auditing, whose work in that particular area has been used by the management, and I have to evaluate that particular work, and then only I can rely as an auditor. Simply, there is an external party, he has given a certificate, I will go accordingly, nothing doing. If you do it, so we will be guilty, we will be caught. The point here is, there is an external expert, fine, but adopt the three aspects that is stated in the SA 500. Obtain the understanding and competency, capability, objectivity of that particular external expert, gain a gross understanding, evaluate the appropriateness in using the same as an audit evidence, then only it can be permitted. Simply management giving an opinion, giving a certificate is not sufficient for your purposes here. Assess the objectivity and competency of the company's external specialists involved in the process. Exactly, the wordings of SA 500 is repeated once again by the auditor here, because he has to do, he says that it has been done. Assess the nature of the addition made to the property, plant and equipment, capital of the progress, intangible asset development on a test check basis, to test check whether they meet the recognition criteria as per Ind AS, including the intended use of management. Assess the impact recognized on account of change in the useful life and disclosure made in the financial statements. I am satisfied, and accordingly I permitted the same to happen. Tomorrow, when there is an external requirement, when the auditor has been asked on what basis you have decided, why there is a huge capitalization, what is the value, what is the basis on that, I may be in a position to prove with my documentation that there is an external expert who is a technically qualified expert, who is competent enough to do this activity, who is objectively has been appointed. I have verified that, and I have also understood the gross understanding. I have evaluated the appropriateness. I am relaying that. Further, if at all there are any problems, I am not at all responsible, because What is stated by SA, I have done it. More over and above than the SA requirements or not at all can be questioned to the auditor here. Just for our academic purpose that I thought we can have a discussion in this particular regard, or even legal opinion. I'll just go for another report where there could be possibility of legal opinions. Just a minute. Just a minute. One another entity where I take the example of recent available report of TVS Motors, where the auditors have stated about litigations and claims. Say, for example, here in the key audit matter, evaluation of uncertain direct tax and indirect tax positions. See, the company has material uncertain tax positions, including matters under dispute relating to excise, customs duty, value-added tax, and income tax. These matters involve significant judgment to determine the possible outcomes of these disputes. So what will be the dispute? How I need to take my provisions accordingly, whether I need to provide for, should I need to treat it as a contingent liability, should I need to go for a disclosure, or nothing has to be done. All this involves certain technical assessment, not only accounting and audit assessment. We obtained the details of demands relating to direct tax and indirect tax. We considered the legal proceedings and other rulings, obtained external opinions. This is what the management's expert that we talk about, and discussed with the company's internal legal team in evaluating the management's position on these uncertain tax position. Satisfied ourselves that it is not probable that an outflow of economic benefits will be required and disclosed obligation as a contingent liability, and accordingly they have gone for reporting here. So wherever required, there are very many places where there will be legal experts, or where there will be an external experts who will be called as a management's expert will be involved. In such a case, it is the responsibility of the auditor to do these three, document these particular aspects so as to comply with SA 500's requirements, so as to satisfy that I have taken all reasonable care and caution while performing an audit here. Evaluate the competency, objectivity, competence, and obtain an understanding, evaluate the appropriateness whenever there is a management expert work is involved. Very many places this will be applicable here. Let us move on to the next requirement of this particular SA 500 with regard to selecting items for testing. On what basis you can select items? There are three means that is discussed in the SA by itself. That is about selecting 100%, that is selecting all items, selecting specific items, sample selection. There are three methodologies, three means that are provided by the SA by itself. Say, for example, in an audit, I have done only through sampling basis, test check basis only I have verified. The management complains that the auditor is negligent because he has not verified 100%. He has verified only based on sampling. So he has not done the audit with reasonable care and caution. Can he be questioned? Answer is no. The SA by itself permits me to do for selecting the items for testing can be based on 100% selection. If the risk and involvement is something high, I may even go for 100% selection if it is possible for the auditor. In certain cases, my normal verification by itself makes this 100% possible. Say, for example, ESI and PF dues, TDS deductions, whether it has been paid, complied by the entity promptly or not. Where I verify all the 12 months returns and all the compliances, it becomes 100% verification here. Managerial remuneration, whether it has been accounted properly, whether it has been disclosed properly, 100% verification possible. Wherever there is a high risk involved, usually the auditor by itself will be having the plan to go for 100% verification. Say, for example, there is a related party transaction, verification of the same will usually happen 100% verification in this particular regard. Again, there is no yardstick, there is no compulsion that this particular area should be verified 100% only. It is again based on the judgment of the auditor. If at all I feel that I need to go for 100%, yes, go for it, considering the size and volume and complexities involved. The second one is specific selection. I may go for a particular item alone and then I can verify. That's also permitted. Say, for example, in expenses, I may take those expenses that are above 5 lakhs. Like that, I may set up a materiality criteria and then I can take up and verify specific selection. Or transaction with this particular party alone, I need to go and verify. Then in that particular case, it will be treated as a specific selection. I can very much verify. Or the normal way, the usual way that we go for sampling. As per SA 530, I may go for audit sampling here, selecting items from a population and then observe my audit procedures and then get the conclusions based on the sample and then project that particular results to the entire population and then form an opinion accordingly. That will be something based on audit sampling here, where As per SA 530, we have different methodologies in sampling, where we have statistical, we have judgmental, we have episode, like that. We have different methods to have it. And then the size of the sample will be again dependent on the complexities that are involved and the internal controls that are there in the entity. Again, it shall be absolutely based on the judgment and materiality levels that is to be fixed by the auditor here. That is with regard to selection of items, and on what basis I am selecting should also to be documented by the auditor here. And lastly, the fourth requirement is something very interesting. Whenever the auditor doubts on the reliability of the audit evidences that he is having, or when there are contradictions between one audit evidence and the other, how the auditor can resolve the conflict here. When the auditor doubts over the reliability of that particular audit evidence, I feel there are possibilities of fraud risk factors, or I feel that it has been forged and then it has been manipulated and then given to me, or one particular audit evidence is inconsistent with the other audit evidence. Say, for example, a smaller example can be a manufacturing entity sends the products to the customer, where I am in my invoice, I say that it is sent for 500 numbers, but the customer's acknowledgement says only 400 numbers have been received, where internally generated audit evidence says 500, the externally available audit evidence says 400, which one I have to rely? There is a possibility. Say, for example, my internally generated audit evidence says 500, and the external acknowledgement from the party also says 500. Then one audit evidence is confirming with the other audit evidence. It will be a corroborative audit evidence. More level of assurance is possible to the auditor. No problem for me. On the other hand, when one audit evidence is contradictory to the other, then I need to go and extend my audit procedure. I cannot stop this. I cannot accept and go away. I need to extend my audit procedure, which one is right, and accordingly other modifications to be made in the finance statements are to be evaluated. Then what I need to do, I need to go for a further extended verification. What further extended verification? What was the stock statement? What is the invoice that is number? Say, for example, the stock by itself on that day was 400. I cannot be in a position to go for a 500 numbers invoicing. So it should be my stock sales says 400. My customer also says 400. I need to go and cross verify the gate pass for how much number the gate pass has been made. I can also cross verify with the transportation. So on various basis, I need to go for evaluating this and then make confirm. Or there may be a genuine case that I might have sent 500. The customer might have accepted only 400 and then returned back, for which acknowledgement has been given only for 400. I need to reconcile. So there will be an extended audit procedure has to be performed whenever there are doubts over reliability, or whenever there are conflicting from one audit evidence and another audit evidence, and then only I will be in a position to satisfy myself. The moment I extend my audit procedures and perform alternative, automatically I will be in a position to obtain that sufficiency and appropriateness, and then I can conclude accordingly. Or in a remote scenario, SA by itself discusses that particular point. SA by itself discusses that particular point, that when the auditor is trying to extend my audit procedure, but still, in spite of my extended audit procedure, I am unable to obtain that particular sufficient and appropriate audit evidence, I may not be in a position to go for a clean opinion considering the materiality level. I may even go for a modified opinion accordingly. When sufficiency and appropriateness in audit evidence is not available, then it will be a problem for the auditor to go for a clean opinion. He may not. Always materiality will be a matter of concern here. Why all these are all very important? Because it is not only about to express an opinion on the financial statement, but also there are certain other legal and regulatory requirements. As I told you, the legal and regulatory requirements are also to be satisfied by the auditor here. That the documentation part with regard to compliance of the standards on auditing requirements, audit procedures performed, whatever the audit procedures, whatever the audit methodologies that I have applied with, along with audit procedures performed. What is this particular audit procedures that we are talking about? There are three types of audit procedures usually that we adopt. Something called as risk assessment procedures, RAP. The risk assessment procedure is nothing but evaluating the inherent risk, control risk, detection risk, considering the risk of material misstatement, all will be treated as risk assessment procedures, including audit risk assessment procedures. Apart from risk assessment procedures, there are two other types of audit procedures that will be applied, something called as test of controls and something called as test of details, which is also called as compliance procedures and substantive procedures are to be applied with. With regard to compliance procedures, the auditor will be applying with regard to internal controls evaluation as stated in SA 315. SA 315 is a beautiful standard that exclusively talks about internal controls, how to evaluate and integrate this particular internal controls in your actual audit are discussed in SA 315 here, where the compliances with regard to the policies and procedures, with regard to internal control standards that is set out by the entity, whether it has been met or not, shall be evaluated and examined by the auditor through this particular compliance procedures, also called as test of controls. On the other hand, with regard to test of details are concerned, it is substantive procedures that are to be applied with regard to the disclosures and numbers variable, where we have a lot of disclosures that are being made, a lot of numbers that are presented in the financial statements. Its accuracy, its correctness are to be evaluated by the auditor, where the substantive procedures will be very voluminous. So even the analytical procedures that I perform will be treated as a substantive audit procedure with regard to the numbers and the disclosures that I'm going to evaluate and verify and say that it is free from material misstatements here. So I need to document that whatever the aspects that I have verified, how I have performed ratio analysis, how I have computed this particular number, how I am satisfied that it is this list requirement is disclosure is appropriate. Like that, I need to go for a documentation, evaluate the sufficiency and appropriateness in audit evidences, and including the conclusions reached, all has to be documented here very precisely, so that my liability is automatically reduced to a lower level. My liability, where I usually used to say with regard to COVID, we have certain vaccinations where we have booster, we have dose 1, dose 2, like that, we have vaccination. Similarly, for the auditors, where he is exposed to the risk of audit, where the only vaccination available to the auditor is documentation here. There are 2 vaccinations available. One is compliance of standards and the other one is documentation that he has to make, so that he is getting protected first of all. Where being an auditor, I am protecting the client. I am protecting the interest of the government. I am making the client to pay the appropriate taxes. I am protecting interest of the shareholders. I am protecting interest of the lenders. So I am protecting the interest of everyone, but without protecting myself. When there is a question, when there is a fraud, when there is a material misstatement, the first question to the auditor, and then there is no one coming for the rescue of the auditor here. So it is my first duty to first of all protect myself and then to protect whomsoever it is. So it is very essential for the auditor to comply with standards on auditing and also document the same, that whatever the compliances that are expected here. Parallelly, apart from expressing an opinion, say for example, I given a clean opinion, is it done for me? No. There are other huge responsibilities that is casted to the auditor. Let me take another 5 minutes for explaining whatever the various documents or various evidences that we need to specifically obtain in order to satisfy the legal and regulatory requirements that are imposed to the auditor, which is basically a byproduct while doing an audit. While discharging an audit, incidentally, there are n number of questions for which auditor has to answer. Before answering, I need to have evidence. Just like that, I cannot answer also. Everything is a specific question. Everything involves specific verification. Everything involves specific audit evidence obtainance, and everything involves specific documentation also. All there are n number of questions. I'll just have a discussion on that. So that we will have clarity on what we do. It's not like last year audit report that we do the same way. No, there are huge responsibilities. This is where there are improvements that are expected from the auditor's perspective here. Say for example, 143.1 duties, section 143.1, that is applicable to every company, private, public, listed, unlisted. Exceptional reporting to be made. There are 6 questions that are asked to the auditor. Whether loans and advances made by the company, is it prejudicial to the interest of the company? Wherever there are transactions merely by book entries, is it genuine or not? Is it prejudicial to the interest of the company? Whether investments have been sold at a price lesser than that particular pricing, is it sold at loss? Whether loans and advances made by the company have been shown as deposits? Whether personal expenses have been accounted as a company's expenditure charged to revenue account? Wherever there are shares allotted for cash, whether it has been accounted properly, whether it is disclosed properly. For cash that is allotted for cash other than cash consideration, whether you have taken proper care in positioning the same or not. Like that, we have exceptional reporting under 143.1. You need not report if everything is proper. If everything is normal, I will be silent. When the moment I am silent, it is deemed that everything is being complied with. No problem with regard to 143(1). On the other hand, however, I need to verify, I need to document that I have verified, nothing to be reported. That's very important. This is not the case of section 143(3) reporting. That's mandatory reporting. Every company has to report that. What is that I have to report? Every company, every year, whether positive or negative, the auditor has to go and report under other legal and regulatory requirements, whether have you sought and obtained all information explanations to the best of your knowledge and that are necessary for the purpose of audit, whether it has been obtained. If it is not obtained, then the impact on the financial statement is to be mentioned. First point. Second point, whether in his opinion proper books of accounts have been maintained or not, which is nothing but section 128 compliance of the Companies Act with regard to maintenance of proper books of accounts. Okay, proper books of accounts have been maintained, whether the balance sheet and P&L account are in agreement with the books of or not, because you are going to express an opinion on the financial statements. Financial statements are not books of accounts. Books of accounts are separate, financial statements are separate. The output from the books of accounts will be there as a part of my financial statements, and financial statements are solely based on my books of accounts. So whether your numbers stated in the books of accounts and financial statements are tallying it or not has to be evaluated. Whether branch accounts office returns have been provided properly or not, like that. All these are all questions that are mandatory to be included. Whether in my opinion the financial statements comply with accounting standards or not, that is under section 133 of the Companies Act. Is there any adverse effect on the functioning of the company? Whether are you making any comment? Whether any of the directors disqualified under section 164(2). For all these questions, the auditor has to specifically perform verification aspects and then collect audit evidence, document it, then only he can report it. Otherwise, nothing can be reported. See, whether any of the directors disqualified or not, how I will be in a position to answer it unless I verify. I need to get a representation from the management. Say 580 will be applicable. I need to go and verify the minute books of the entity, whether any of the directors getting disqualified or not. Confirmation from the directors, other verification process, and then only I may go for a conclusion that none of the directors disqualified or some of the directors are disqualified, and then only I can go for reporting here. Huge responsibilities, huge documentation aspects, huge audit evidence obtaining here is involved. Any qualification, reservation, or adverse remark in the maintenance of the books of accounts, whether the company has an adequate internal financial controls with reference to financial statements. This is something new that is under Companies Act that we need to go for reporting here, but there are relaxations that are also available. So reporting on internal financial controls with reference to financial statements with regard to financial reporting. Are you having internal controls, internal financial controls? Basically, I'm not going to express an opinion on the internal controls of the entity. However, here for this particular question, the auditor has to express an opinion on the internal financial controls with reference to financial statements. It is not comprising of entire internal controls, but subject to the confined to internal financial controls or financial reporting alone. So that also to be verified by the auditor and to be reported, and other matters to be prescribed, huge matters. Recently, this year onwards, there are furthermore questions that they have added. The load of the auditor is keep on added. I don't know when it is going to get resolved. There are a lot of information that the MCA may want or other regulators may want. All are loaded to the auditor. Even that was the exact case of GST, exact case of tax audit, where there are huge responses to the audit, responsibilities to the auditor that is loaded here. The other matters to be prescribed under Rule 11, we have 3 specific questions that was there already, and now it has been added further. Whether company has disclosed the impact of any pending litigations on its financial position and its financial statements, whether the company has made provision as required under law or accounting standard for material foreseeable losses for long-term contracts, including derivative contracts or not, and then is there any delay in transfer of amounts to investor education protection fund or not, like that. There are specific areas, specific question without verifying, without obtaining audit evidence, I cannot answer. I cannot answer here. So I need to get a documentation. I need to make an audit evidence, and then only I may be in a position to report. Sir, I am a small company, sir. Just the husband and wife are the directors, and then it's a private limited company, sir. Why I have to go for reporting all this? Answer is yes. How to report? No other option available. You need to have a documentation. You know very clearly there is no applicability of investor education protection fund, but still in your management's representation that you need to get it, and then you need to document it so as to have a documentation, so as to have an audit evidence here. This year onwards, investments are obtaining loan through an intermediary like that. There is a big question that has been asked to the auditor. Negative reporting here, whether management has represented that to the best of its knowledge and belief. Other than those items disclosed in the notes of accounts, no funds have been advanced or loaned or invested either from the borrowed funds or share premium or any other sources or kinds of funds by the company to any other person or entities, including foreign entities, intermediaries, with the understanding, whether recorded in writing or otherwise, that the intermediary shall, whether directly or indirectly, lend or invest in other persons or entities identified in any manner whatsoever by or on behalf of the company, or provide any guarantee, security, or the like on behalf of the ultimate beneficiary. That is, from the investing my money through another intermediary party to a entity, whether it is recorded in writing or not. This is from the outflow. There is also something like an inflow, whether management has represented that to the best, no funds have been received by the company directly or indirectly, whether it recorded in writing or otherwise by any other third party through an intermediary. And lastly, auditor also go and has to have a report here. The third question is very interesting. Based on such audit procedures that the auditor has considered reasonable and appropriate in the circumstances, nothing has come to their notice that has caused them to believe that the representation above made by the management under clause 1 and 2 contain any material misstatement like that. The auditor has to go for negative reporting. Nothing has come to our knowledge to say that it is containing material misstatement, materially misstated like that. I need to go for reporting here. All these are all shall be based on the verification process, the audit evidence that I have obtained here. Payment of dividend also, compliance of section 123 is to be made. That is also a new reporting requirement to be made. Next year onwards, with regard to the software, the accounting software that the company is using, the trial, audit trial, the logs that they are going for, whether is it there or not to be reported like that, there is a specific reporting requirement. Apart from it, the managerial remuneration under section 197, whether it has been complied with schedule 5 or not, like that, where there is a specific reporting requirement here also that is stated under 197 of the Companies Act. So these are all the important aspects that I need to consider while finalizing an audit of financial statement of a company. Whether it may be private, public, small, big, I need to answer all these questions. Invariably, my audit report should include this. All this reporting requires me to go for a specific verification. Apart from the big one, that is nothing but to express an opinion. It expresses a clean opinion, qualified, adverse, whatever may be the case. This is independent. This is under legal and regulatory requirements. I have to go for reporting here. I need to have audit evidences parallelly done with audit documentation. Apart from it, the big thing continues. Report on CARO under section 143.11, where CARO 2020, which wants specific clauses to be reported by the auditor. And there is a special session, separate session that we can have for CARO reporting alone, because beautiful new questions have been included. CARO totally 21 clauses to be reported. Old CARO 16 contained only 16 clauses, but now revised CARO 2020 contains 21 clauses to be reported, where you have the formula of 7:7:7. The 7:7:7 is nothing but 7 old clauses retained as it is, not even a single full stop, comma change, same thing to be reported. 7 clauses modified with additional reporting requirements, and 7 new clauses, entirely new clauses. So totally 21 clauses to be reported by the auditor. Exactly verify. Without verifying, the auditor cannot go for reporting. That's why there are special checklists, CARO checklist, CARO compliance checklist, and all to be made so that to have an audit evidence accordingly. Also, fraud reporting under 143.12 is also a requirement that is to be complied with under the Companies Act. Wherever there is a fraud involved for a value of rupees 1 crore or more, then in that particular case, the auditor is not only to report to the management, but also to report to the central government accordingly. So there are all other additional responsibilities costed to the auditor. With regard to fraud, is it mandatory that the auditor to detect it and report it? No. For those frauds that I suspect, for those frauds that are brought to the knowledge of the auditor while doing an audit, in that particular case, I need to go for reporting, where including government report also, 143.11 and 143.12. So the point that I'm driving here home is, in finalizing an audit, apart from expressing an opinion on the financial statement, which is a very major task, parallelly, there are other reporting responsibilities also that are costed to the auditor. I need to consider in a holistic way. I need to design my audit procedures in such a way that I apply that particular audit procedures and obtain audit evidences sufficient and appropriate, and have a documentation so that I answer all these questions with proper documentation on my hand. Sir, is it practically possible to have documentation for all this? Absolutely, yes, possible. Even at least we may even have a written representations in this particular regard. That alone is not the prompt way that I suggest. There are very many ways. There are standards that very rightly talk about the procedures, but also they involve this particular documentation with written representations here. Let us going for the next standard, SA 501, that is on a specific consideration. Audit evidence, specific consideration. What is the specific consideration? What I need to go for specifically? There are three matters that are specifically discussed here as per SA 501. All other standards doesn't go for this particular specification. They go with a generic approach. They go at a macro level, but this 501 is at a micro level. It talks about three items. One is existence and conditions of inventory, which is one of the important component in any of the financial statement. Inventory, because inventory valuation is having a huge impact, effect on the financial statements. So the duties and responsibilities relating to existence and conditions of inventory is discussed here. Completeness of litigations and claims, which is another litigative area, debatable area, where it involves a lot of estimates and judgments with regard to litigations, which is having a huge potential, which may even turn up the company here. Going concern could also be affected if there is a adverse litigation effect. And third one is presentation and disclosure with regard to segment information. The third one is not discussed elaborate in SA, but it is discussed in accounting standards, segment information and all. You comply with financial reporting framework. There ends the matter. But the first one and second one, there is no specific accounting standard that they talk about, but specifically the procedures of audit, what is to be applied, is discussed in this SA 501 here. Existence and conditions of inventory. With regard to verification of inventory, who is responsible? Basically, the verification of inventory is the responsibility of the management. Auditor to apply the principles enunciated in SA 500 as well as 501 also. 500 talks about observation, inquiry, recalculation, reperformance, physical inspection. All these are all part of inventory verification only. And 501 also gives certain specific aspects that I have to adopt and formulate. Physical verification of inventory, who has to perform, whether it is to be done by the management or to be done by the auditor. Basically, the responsibility lies with the management, but auditor should also be present at the time of physical verification here. There is a CARO question, CARO 20. As I told you, I'm more focusing on the reporting responsibilities on finalization. So I always link with the CARO here because it's a huge responsibilities. Being a new thing, people need certain aspects and guidance. So I always refer to CARO here. Please understand, in CARO clause 2, 3 clause 2, there is a question whether physical verification of inventory has been conducted at reasonable intervals by the management, and whether in the opinion of the auditor, the coverage and procedure of such verification of the management is appropriate, whether any discrepancies of 10% or more in the aggregate for each class of inventory were noticed, and if so, whether they have been properly dealt within the books of accounts. In one question, they ask 4 questions also. So I need to talk about the adequacy with regard to the reasonable intervals of the management, whether the coverage and procedures of the inventory verification is also appropriate, and whether is there any middle discrepancies of 10% or more, whether positive or negative, and the same treatment in the books of accounts has to be specifically verified by the auditor, and then only I can report it. Apart from it, very interestingly, this year onwards, whether during any point of time during the year, the company has been sanctioned working capital limits in excess of 5 crores. I have obtained a loan from a bank in excess of 5 crores in aggregate from bank or financial institution on the basis of security of current assets. Say, for example, based on hypothecation of the stocks or based on stocks and debtors, I might have got the overdraft facility or the CC facility with regard to amount for extending 5 crores. In that particular case, the periodical stock statements that I will be submitting to the banks, I need to compare as an auditor. I need to compare with such statement along with the finance statement, and is there any variance or not. This is what exactly, whether quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts of the company. If not, give the details. Usually what happens? Usually bankers want that particular quarterly return. So the company on their own give the quarterly returns, statement, stock statement. They will inflate the stock number so that their DP is not getting affected. So they will try to inflate the numbers and then give it to the banker. But however, when you go for actual audit, the actual stock numbers will be very much less only. And I don't care about whatever the statement that is given to the banker. What is there in the financials, I sign it and come out. But now it is the duty of the auditor to go and have verification with regard to the statement submitted to the bankers, along with whatever that is there in the financial statement. If at all there is any discrepancy, if at all it doesn't match, I need to report it in my Caro report. So specifically, it wants me to perform this particular inventory along with verification done by the management, its reasonableness, its appropriateness, the procedures that are carried out. Because inventory involves a lot of estimates and judgments, especially in case of capital, especially in case of work in progress, and evaluating the NRV of that particular in stock. So there are huge aspects, judgment that is to be made by the auditor, and compliance of SA 501 to be done in this regard. As per SA 501, the auditor is to be present at the time of stock taking, considering the impact of the inventory, considering its materiality levels. The audit engagement team shall be deployed while carrying out the physical verification. I need not do the physical verification. Let the management carry out. Let me be observing that particular, my inventory, my engagement team shall be observing what is happening in the inventory verification, how the management is actually taking the stocks, and then how they go for verification methodology. Observe the procedures that are performed by the management, because I need to expressly say in my Caro reporting here where the procedures that are performed by the management is appropriate, because every different types of inventory involves different type of verification methodology. My stocks that are in liquid form may require a different type of verification. The stocks that are there in a solid form, that too in a packed condition, that may require different type of verification. The stocks which are in WIP stage, which are in the production alongside, which may require a different type of verification. So how the procedure is to be adopted by the management, accordingly the auditor has to verify the appropriateness of the same. I may also go for inspect the inventory and perform test counts on a cross-check basis. I may test out, say for example, it is there in penny bags and every bag is of 100 kgs. I may be in a position to go and take a particular bag and then go for cross verification with regard to the weight, with regard to its quality, with regard to the item. I may cross verify the same, test check, perform test counts also. Verify estimations of the management, especially in WIP estimation, work in progress, slow and non-moving items, especially whenever there is no movement at all in the inventory ledger, the opening balance, no debit, no credit, and then the closing balance is getting continued. It should involve a high questioning mind, skepticism to the auditor, why the same opening balance is there continued. In that being the case, what about the usefulness of that particular inventory? What about the carrying value of that particular inventory? Because whenever there is no movement, it is obsolete. So there is a possibility of non-moving stock. There is a possibility of throwing it away at a scrap value. So the valuation goes for a very important aspect here. So the auditor needs to evaluate how the management is evaluating the same, apply cutoff procedures also. So wherever there is a particular date on which the inventory is being performed, I need to apply the cutoff procedure, last GRN, last production issue ticket number, and then accordingly I need to go for evaluating it, obtain sufficient appropriate audit evidence with regard to inventory, specifically as stated in SA 501 here, because it talks about exclusively on inventory aspect. Attendance at PV physical verification is a mandatory item unless there are impracticalness. There are possibilities that PV can be conducted at a date other than the financial statement date. Usually on the financial statement date, physical verification is to be done. There are possibilities, say for example, even for COVID for the past 2 years, 31st March was under complete lockdown. So in that particular case, I may not be in a position to perform my audit as on 31st March. I may be in a position to perform on a different date. In that case, I need to go for documenting the same and then to apply the cutoff procedures and then to go for other alternative audit procedures. I need to also verify in between the days, whatever the movements that is happening in the finance statement, I need to go and evaluate the same for inventory movement here. Alternative procedures, if not present during the physical verification, specifically inventory under the custody of control of third parties also, the auditor has to go for documentation, audit evidence here. There are possibilities that I may send my stock to my subcontractor or to a job worker where my stock will be there with them. So the stock's lying at a third party. In that particular case, there is a possibility of getting an external confirmation as per SA 505, perform inspection also wherever possible. SA 402 shall also be applied here, where service entity, where using the auditor's report of a service organization can be applied. SAE 3402 can also be applied in this particular regard, where assurance report from a service organization can be obtained, and you can also verify the same documented. Attendance at physical inventory, if it is impracticable, there is a separate requirement by SA 501 in this regard. Auditor's attendance at physical inventory counting may be impracticable. Say, for example, factors such as location of the inventory is located in an area which pose threats to the safety of the auditor, or matter of general inconvenience. Can I ignore the inventory verification process at all? Answer is no. The matter of difficulty, time, cost involved is not in itself a valid basis for the auditor to omit an audit procedure here. I cannot omit. I need to perform alternative audit procedures. Even during COVID times, the digital way of verification is possible. Video conferencing, video way of virtual verification and all was made possible. It was accepted also. The documentation aspects relating to inventory verification, what I have to do specifically, what's the extent of coverage of physical verification with value? Say, for example, I may not be in a position to carry out 100% verification, but to what extent you have verified has to be documented. Why that particular verification levels has been taken up. Whatever the instructions that are provided to the management, by the management to their staff, has to be documented. To my audit engagement team, whatever the documentation, whatever the instructions that I have provided to be documented here. Inventory physical verification sheets that are duly authenticated by the engagement team as well as by the management has to be documented. Say, for example, I go with the physical verification sheet, I note down with the timing and what is the product, what is the material code, what is the number, book stock, physical stock, whatever the difference, all has to be captured, and then it has to be signed duly by the management as well. Extract of the copies of the books of accounts, inventory ledger, reconciliation statements and all will all be part of my documentation here, because my book stock has to be supported with the ledgers. Then only I can cross verify with the physical stock, and difference if any can be arrived at. So it is to be also to be taken up. Material discrepancies, whatever that are identified, how it got resolved in the books of accounts is to be noted, because it's also a matter of reporting under CARO here. Action taken for resolving such material discrepancies, adjustments in the books of accounts are all to be documented carefully by the auditor after obtaining the audit evidence here. Yeah, there are other matters to be described, to be discussed as per 143.3, as we discussed. Disclosure of impact of pending litigations is one of the point, where the pending litigation is the second requirement, second point of discussion under SA 501. That is nothing but legal compliances, where how the litigations has been discussed, how I need to verify with regard to litigations, because it is considered to be the most complex aspect. How I will be getting to know about there is a litigation with regard to the company. I may be in a position to evaluate the ledger scrutiny here. P&L expense ledgers verification can be possible for the auditor to identify whatever the legal expenses that they have booked for what this particular case, for what this particular amount has been paid. Is there any legal and regulatory requirements as per SA 250, consideration of other laws and regulations? Is there any particular case that affects the going concern of the entity? Like that, I need to evaluate. I may also have an in-house discussion with the legal department. Big, large corporates may have an in-house legal department, or it may be outsourced to external agencies also. I may even verify the board minutes and committee minutes to know about the outcome of a particular case that is pending, because usually for a large corporate, they will be going for a board report with movement of the cases and the judgments that have received favorable against the course of action, all will be presented in the board report. It can be taken as a source of information from by the auditor. I may also go through the correspondence with the lawyers. I may also directly communicate to the lawyers with regard to a particular litigative case here. Obtain direct confirmation from the lawyer with regard to list of litigations and its possible outcome. It may also apply to SA 505, SA 501 will also be applicable. SA 500 shall also be applicable, being a management expert in this case. Meet the lawyer. Whenever there is a difference of opinion between the lawyer's view and the management's view. Lawyer is of the view that we are not going to win the case, but the management says that we are going to win the case. Then there is a conflict. Then I may be in a position to directly meet the lawyer, and wherever there are significant risk is involved, and then I may know the real status from the views of the lawyer can also be possible. I may also document the same, obtain a management's representation with regard to identification of legal cases, accounting of the same, and disclosure of the same to the shareholders, because litigations and claims contingent liabilities are something very important, very important for its disclosure here. In case of incomplete information or non-disclosure of an item which is material, I may be in a position to go for a modified opinion only, and the auditor may not be in a position to go for a clean opinion because of the impact that is getting created. Also, where there are examples related to CARO, as I told you, where dispute in title deeds of immovable property. Under clause 3.1, with regard to immovable property, whether there is a title deed, is it in the name of the company only, like that the auditor has to report. Assuming there is a dispute, in such a case, the auditor may go for getting the response from the lawyer here, the legal expert here. In this context, the auditor may also consider communicating with the legal counsel, whether in-house or external, in accordance with the principles enunciated in 501, audit evidence specific consideration for select items with regard to title deeds of immovable property which is under dispute, and accordingly to decide the disclosure aspect as per CARO here. Auditor may also consider disclosing the dispute while reporting this clause under CARO. This is one of the area where the legal opinion can be obtained. Or even now in CARO 2020, there are two other areas where there is a square applicability of legal impact. Prohibition of Benami Property Transaction Act. Is there any cases that are pending against the company where they have any litigations under this particular act? Or with regard to clause 7 for statutory dues, where there is a disputed statutory due. There are two types of statutory dues. One is undisputed. In that particular undisputed, whether they are regular in repayment and is there anything outstanding for a period for more than 6 months is a question. And with regard to disputed statutory due, the forum in which it is disputed, the amount that is pending, the details has to be provided here. So for that also, the auditor may go and obtain a impact from SA 501. I need to go for audit evidence as well as documentation here. All these are all having an impact on CARO reporting also while finalizing an audit report. And the third essay that today we are going to discuss is about SA 505, a simpler, less complex essay that is about external confirmation. External confirmation as per SA 505, where we have two types of confirmation. One is positive and negative. So the moment the positive is the term, slowly we are forgetting the term positive. It's good that we are forgetting it. The most negative word for the past time was positive. So I never thought that positive become negative like this, but because of the COVID impact, where we are always been hearing this positive and all. Here also an external confirmation where we have two types of confirmations. One is positive and one is negative. Let us understand what do you mean by external confirmation, and then we'll go for that particular understanding as well. Sorry. The external confirmation is basically an audit evidence obtained as a direct written response. That's very important. It's a written response to the auditor from a third party, that's nothing but a confirming party, in paper form or by electronic or by other medium. Examples could be bank balances or debtors, creditors, stocks, and other assets held by the third parties, where there is a confirmation letter that is drafted to the auditor. This is the balance. My books of account shows this. Like that, they may be going for a confirmation. My account statement shows this particular balance. Like that, the auditor can be given a direct written response in inquiry by the management, will be treated as an external confirmation. As we find out in the definition itself, it can be in a paper form or even in an electronic form. That could also be possible. So electronically, digitally advancements that are happening. So we are also trying to reduce that particular evaluation gap also by standards. Standards permit us to go for it. Let us understand what is the precaution to be taken in this regard. As I told you, external confirmation, we have two types of external confirmation. One is positive and the other one is negative. What is positive? I request a confirmation, other party confirmed it. Is it positive? No. Other party negated it. Is it negative? No. That's not the aspect. Positive confirmation request, negative confirmation requests. The letter for external confirmation will be drafted by the management, will be approved by the auditor, and will be sent to those parties who are selected by the auditors. Maybe all the parties or certain specific parties like that the auditor may give at the discretion of the auditor. That the positive confirmation request letter is whether or not the balance is matching or not matching, the sender will be requesting a response from the third party and will be directly sent to the auditor of the company, will be treated as a positive confirmation request. On the other hand, in a negative confirmation request, the request by itself will be made in such a way that if at all you agree with the balances, you don't communicate. If at all you don't agree with the balances, then you communicate like that. It will be something like a negative confirmation request. Basically, inaction by the other party will be treated as compliance in a negative confirmation request. So it is something very dangerous, is what the term that I have to use. So the auditor will be more comfortable in a positive confirmation request rather than a negative confirmation request. It is lesser persuasive than a positive confirmation here. Response from the confirming party, whether they agree or disagree with the information requested, will be positive. On the other hand, response only if the confirming party disagrees with the information will be negative. So even though the other party doesn't respond, then it will be deemed that he has accepted the perspective. That is actually not right. So predominantly the auditors will be designing to go for a positive confirmation request. So whether or not your balances is matching, you please send us your numbers from the books of accounts like that. The auditor will be drafting, will be advising the management to draft it, and the management will be sending to those parties with a specific instruction that to send back the particular confirmation directly to the auditor, given with the auditor's address. Usually, as you know, the paid postal envelopes and all will be attached along with that particular confirmations, or even email confirmations nowadays are even getting generated, which is permitted here. In Caro, there are very many points for which external confirmation is to be obtained. I'm just trying to link it so that you have that particular caution. You also get the same before communicating here while reporting under Caro, where these are all the cases where there will be specific external confirmation aspects. Say, for example, title deeds of immobile property has been mortgaged. In that particular case, the specific confirmation should be sought from the respective institution where there is a mortgage here, or there is a clause to be reporting on willful defaulter, whether any bank or financial institution has announced this particular client as entity as a willful defaulter or not. Like that, there is a question. So how I will be getting to know about that there is a willful defaulter notification here. So at the time of obtaining confirmation of balance outstanding with regard to loans or borrowings from the banks or financial institutions, the auditor may also include this particular term. Sir, please give me confirmation whether have you classified this particular party as a willful defaulter or not. So based on that, that will be a documentation for the auditor to say that the entity is not treated as a declared as a willful defaulter. Or say example, stocks lying with the third parties. So wherever there are stocks that are lying with the third parties, say for example, even my job worker, my subcontractors, even GST credit is allowed, where in the opinion of the auditor, where physical verification of inventories is to be done, I may even go there in that particular third party's premises and get it, or wherever required, I may get a confirmation. At times, what may happen, even it may be at a transporter's disposal, it may be at a godown, or it may be at a warehouse. So in such a case, that there may be a mandatory confirmation from the other party will be required for the auditor to satisfy its correctness. Also default in payment of loans and borrowings, where in Caro also there is a specific question on default of loans and borrowings. In such a case, the moment there is a borrower wise, lender wise, that the auditor has to report on the default amount. So I may get a confirmation from the other party so that this particular default can be reported properly. All shall be based on the confirmation received from the third parties here. Again, with regard to technology is concerned, there are updated technologies like use of third party to coordinate and provide response. Say for example, I am having an account with bank B. I want to get a confirmation from bank B. So I am making a confirmation request to bank B. But what happens is bank B is having another third party service agent to provide all the information required for external confirmation here. So now in the given case, it is not the bank B is going to respond, the agent of bank B is going to respond. Automated softwares are available. Automatically there will be numbers that will be generated and then letters will be dispatched. In such a case, how to use that as an audit evidence? If a confirming party, SA 505 specifically answers this, if a confirming party uses a third party to coordinate and provide responses to confirmation requests, the auditor may perform procedures to address the risk that the response may not be from a proper source, a respondent may not be the authorized person to respond, and the integrity and the transmission might have been compromised. So there are all these risks are there associated. I need to have addressing these particular risks, and then I can rely that particular responses that is even provided by a third party after satisfying myself. At times, at a remote possibility, management may request to the auditor to skip the confirmation process, entire confirmation process. So please don't do that. Or there may be requests that, sir, please don't do this for this particular party alone. Like that, there are requests that can be made by the management here. In that particular case, where the request from the management is reasonable, where there is a genuinity of that particular case, I can even drop the management confirmation process. I may even go for other alternative procedures, but I have to document why I have skipped the confirmation process here. On the other hand, if it is not reasonable, the management's reasons are you don't send it at all, like that, without any valid reason that the management requests the auditor, it questions the integrity of the management itself. I need to go and reassess how frauds and errors are there in the financial statement. Also, I need to consider the effect of SA 260 and 705. SA 260 talks about difficulties faced by the auditor in doing an audit, and SA 705 talks about modification in my audit opinion without having sufficient appropriate audit evidence. Because I am unable to perform my audit procedure, there may be treated as a limitation in the scope of audit. I may even go for a qualified opinion or even go for a disclaimer of opinion, as the case may be, whenever I am unable to perform my audit procedures here. That's it with regard to SA 505 is concerned. But I will also try to have SA 570 also, even though this particular discussion doesn't contain SA 570, but I thought I need to include this particular 570 also, because in finalizing this going concern, SA will be having a very vital role. Some few minutes that I would like to take with regard to 570, which is recently revised. We have a specific reporting requirement under this particular going concern, because after COVID, especially the COVID impact on the entity's continuity, entity's ability to continue as a going concern is largely affected. Predominantly, many companies face that particular situation here. That's why many companies have gone for an emphasis of matter reporting also about the impact of COVID also, as per SA 706. So in this case, what is expected from me? There is a new term that has been included as
Sir, no voice. Balaji sir. Hello. Hello. பேசுங்க sir. No. வரல sir, வரல. No sir, no sir. Hello.
Are you able to hear me now?
Now okay sir. No, okay, sir. Continue sir.
Very good. Thank you. See, this is something inherent problem which is happening in a virtual meeting. Sorry for this. Really, extremely sorry. There is some issue here.
It happens.
Yeah. Only for the past few minutes, I was not able to hear, or what was the question? It's on
maximum 1 minute, sir. Maximum
1 minute. Okay. Got it, sir. Thank you, Secretary, sir, for that.
Yes, sir.
With regard to material uncertainty, as we are talking about, when the material uncertainty is existing and the same is affecting the going concern, the same has to be reported, and my opinion by itself will be modified. On the other hand, when there is a material uncertainty, but it doesn't affect the going concern, still the fact has to be reported here. There are new changes that got made in the audit reporting here. I'll just go for that particular table, reporting change. Instead of earlier, wherever the going concern got affected, we used to report under emphasis of matter paragraph as per SA 706 earlier, pre-revision SA 570. Now, after change of SA 570, we cannot go for emphasis of matter paragraph once again. We need to go for a new paragraph called material uncertainty relating to going concern. Like that, I need to head a particular paragraph in the audit report itself, and then I need to go for reporting it here. Exactly, because this is also having an impact on your CARO clause. CARO, there is one another clause. Though it doesn't talk about going concern, it talks about the ability to repay its creditors or its current liabilities for the items that is falling within 1 year. See, this particular clause is a very important clause to be analyzed carefully by the auditor before reporting under CARO while finalizing an audit. Please understand, on the basis of the financial ratios, aging and expected dates of realization of financial assets and payment of financial liabilities, other information accompanying the financial statements, the auditor's knowledge of the board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists as on the date of the audit, that company is capable of meeting its liabilities as and when they fall due within a period of 1 year from the balance sheet date. It's a huge question on to the auditor that within 1 year, whatever the liability that is falling, whether the company is having capability to repay or not. On what basis I will be saying this? Based on the financial ratios, aging, expected date of realization, financial assets, financial liability, my understanding of the company, board of directors plan, all about this. Based on this, I need to go and express a comment on this under CARO that nothing is preventing the auditor to say that the company may not be in a position to pay, or the company shall be in a position to pay. Like that, I need to go for reporting here, which is having an impact on the going concern indirectly also. So the auditor has to be very careful in reporting all this, especially with regard to the main reporting. Apart from CARO reporting, the main reporting, this is the change key snapshot as per SA 570 read with 700. There is a beautiful implementation guide issued by ICAI AASB in this particular regard. I request members to go through that particular implementation guide with regard to SA 570, which is freely downloadable under our institute website. Where material uncertainty is there, adequate disclosures have been made, but going concern not affected. What I have to do? Include a separate section in the audit report stating that material uncertainty relating to going concern. In spite of the fact adequate disclosures have been made, in spite of the fact going concern was not affected, still it is to be included. On the other hand, material uncertainty is there. It doesn't affect going concern, but it is inadequately disclosed. Material uncertainty, they have not disclosed. Then in such a case, non-disclosure of material uncertainty tantamounting to material misstatement. Since material misstatement is there, I may go for a qualified opinion or adverse opinion only. I cannot go for a clean opinion. I need to go for a modified opinion only. Even though going concern, no problem. Material uncertainty, they have not reported properly. Management has not disclosed properly. I need to go for a modified opinion only. On the other hand, going concern by itself got affected. Material uncertainty, because of which going concern by itself got affected. I don't have any other option. I need to provide adverse opinion only. No other option available as per SA 570 along with 700. I need to go with adverse opinion only is what the fact that we need to go for it. Just a minute. For academic interest, I'll be in a position to take a live audit report with regard to a company. Just a minute. I may go for Reliance Power, where one can see this particular aspect. This is a latest 31st March 2022 report of Reliance Power Limited here. Opinion has been given, basis of opinion has been given. See, you can see this particular paragraph called material uncertainty relating to going concern. What does it mean? Because by understanding this particular chart, I can understand that there is a material uncertainty. Going concern is not affected, but the management has disclosed, auditor is satisfied. We draw attention to note number 23, 26, 27 of the standalone financial statements, wherein the company has incurred losses during the year. Its loans have fallen due for repayments, and the loans which have been fallen due of subsidiary companies for which the company is a guarantor, and its current liabilities exceeds the current assets. So there is a huge impact. Current liabilities exceeds the current assets. Indicate that material uncertainty exists that may cause a significant doubt on the company's ability to continue as a going concern. However, for the reasons more fully described in the aforesaid note, that is 23, 26, 27, the standalone financial statements of the company have been prepared on a going concern basis. Our opinion is not modified in respect of this matter. Like that, the auditor has stated it. There is a material uncertainty. It has been disclosed properly. I feel it is proper based on the auditor. He feels that it is fine, but he needs to disclose that matter in the audit report. If he doesn't do this, then there will be a problem with the auditor here. He also talks about key audit matter. See, he can also see here independent external valuation expert engaged by the company, valuation reports and all. He evaluated the appropriateness of the company's assumption. All these are all SA 500's impact that he is reporting about. Impairment of assets is also another key audit matter that they go for it. All other reporting requirements, whatever that we have discussed with regard to 143.3, see 143.3, 143.11 CARO reporting, and other based on rules, whatever the reporting that is to be made, all have been reported. It's an aspect that the auditor has to go for this, especially with regard to title deeds of immovable property. You can see in CARO reporting where there are title deeds which are not in the name of the company, which is in the name of the erstwhile company, Reliance Clean Power Limited. The auditor also give that what is the value of it, which is not in the name of the company, whether it is held in the name of the promoter's name or not, to be reported. The next one is maybe with regard to loans. Based on records examined by us, information explanations given to us, the company has been sanctioned working capital limits in excess of 5 crore from banks on the basis of security of current assets, and quarterly returns or statements filed by the company with such banks are in agreement with the books of accounts of the company. So the auditor says it is in agreement with. In that particular case, I need to have audit evidence. Without audit evidence, without performing aspects relating to SA 501, without having documentation, if I said so, huge problem to the auditor. So whatever the answer that I told for, also holding of any Benami property, Transaction Prohibition Act, where I need to give a legal report, and then accordingly I may conclude here, or a declaration from the management here. Say for example, the demand repayable, the company has not promptly repaid the dues within the prompt time. So there are loans to parties which is not paid. Based on verification of records and information explained to us, the company has granted loans either repayable on demand. This is the one that the company has given. Let us go for the other aspect where the company has obtained. This is something on disputed statutory due. They go for reporting. This is what default. Exactly this particular question. Based on the examination of records and information expressions given to us, the company has defaulted in repayment of its loans, payment of interest to any lenders. Yes, there is a default. To whom it is there is a default? I need to give party wise. Axis Bank, principal amount not paid on due date, period, maximum days it is pending, interest for that amount not paid on due date, maximum period that is ending, remark 6 quarterly installments not paid to Axis Bank, Yes Bank, Axis Bank, like that. They talk about for what are all the parties, what are all the amounts that are pending, including the interest value, the days with which it is pending, all to be reported here. Exactly, this is the point that I told you. In such a case, I need to get a confirmation from Axis Bank that this is the value that is pending from this particular company. So that the bank also needs to acknowledge, yes, they need to pay principal of this much and interest of this much, like that. There should be a confirmation so that this particular accounting will also be proper here. So these are all the precautions to be taken parallelly by the auditor before reporting. It's not a usual way of reporting that we in Caro that is happening. We need to go for a detailed verification here. Say class 19, as I told you, according to the information explanations given to us on the basis of financial ratios, aging and expected dates of realization of financial assets and payment of financial liabilities, other information accompanying the financial statements, our knowledge of board of directors and management plans, and based on our examination of the evidence supporting the assumptions, indicate that material uncertainty exists. So here clearly the auditor gives that particular point. There is a material uncertainty exists that may cause a significant doubt on the company's ability to continue as a going concern. We further state that our reporting is based on the facts up to the date of the audit report, and we have neither give any guarantee nor any assurance that all liabilities falling due within a period of 1 year from the balance sheet will get discharged by the company as and when they fall due. Like that, they correctly report, because already there is a material uncertainty for the main opinion. For the Caro opinion also, they go and cautiously they report in this regard. Dear learned members, all this exercise that what we are doing is just to ensure that we are all provided with the right information so that we carefully verify before reporting in this particular regard. Just for academic purpose, I have taken these reported annual financials, not for any other purpose, just to know that there are very many ways in which the reporting is happening. The auditor has to be taking all utmost reasonable care and caution in ensuring that he is reporting and discharging his complaints dues promptly and properly here. That's it from my end with regard to finalizing an audit, especially in light of audit.
Sir, voice poichi. Class mudinchi voice. Voice poichi, sir. Last 10 seconds only. No, sir.
Balaji sir, your voice is not audible.
Yes.
Not sure whether our voice is audible.
No. Our voice is listening, but anyhow, session is over now, sir. I think so. Sir, now we are getting, sir.
Yes, sir. Thank you, sir. Thanks. I think yes, my session is over. With that, SA 500, 501, 505, including 570 coverage was happening. And I thank you one and all for your wonderful participation, including the secretary and the entire team of ICA, the chairman, and all the members for your gracious presence and participation. Whatever the queries that if at all you have, I will be in a position to take it up.
I think this question is already answered, sir. Obtaining audit evidence in performing compliance and substantive procedure comment. This question is answered. Okay. Any other members? Any other question, please? If anybody want to speak something, give closing remarks or vote of thanks, I request members. If anybody interested, please raise your hands.
I will be sharing my presentation also, sir.
Yes. We'll host in the website, sir. I think no member is asking any question. With this, sir, we will conclude the wonderful session. My sincere thanks to you for handling the session such an interesting way. I remembered your session remembered my CA final classes.
Very good.
Auditing.
Very good.
I never thought auditing will be such a fascinating subject. After listening to you only, I realized
yes, sir.
Auditing can be taught like this also.
Yes, otherwise, I
love. Thank you so much, sir. You covered so many things: 500, 501, say 505, 570, with more practical examples, and covering Caro also, which is considered to be more important these days. Now I request Upalapati Sharan Kumar, Sikasa co-chairman, to give formal vote of thanks. My role here.
Yeah, Balaji sir, really very energetic session, I can say.
Thank you.
You know, anything with respect to the practical, maybe people like me can take even 6 hours. But theoretical topic like auditing, engaging audience 2 hours continuously, I am sure it's not that easy. I thank officially you on behalf of our Hyderabad branch of SIRT of ICI, sir. I thank our secretary, chairman. I thank all the participants who attended the session, and throughout, I can see throughout the session, most of the 85% of the members attended. I thank the entire staff of the Hyderabad branch who, in fact, initiated this entire technology and so on. Sir, we would like to associate more from our branch in future sessions.
Sure,
Yeah.
sure, it's my pleasure.
Santosh, can you please share the virtual?
Yeah, sir, virtual appreciation, sir. This is
Thank you, sir.
we can provide.
Thank you.
Please accept our.
Wonderful. Oh, it's first time I'm receiving a virtual certificate right at the conclusion of the
Santosh, full screen.
Very good.
Santosh, full screen.
I think, as I told you in my speech, that Hyderabad is always technically and technologically they are always advanced. It is proven. It's proven once again. I'm really thankful to you all people. Thank you to Uma Madam also. She only initiated that immediately we need to have a session, sir. Like that.
Yes, sir. She is very.
Thank you all.
Her
I would like to meet you all in person.